Hi, this is Jim Welsh from macrotides.com. Thanks for tuning in. This weekend is the G20 meeting in Japan, and all eyes are focused on President Trump and President Xi. They are scheduled to meet for 90 minutes on Saturday, and everyone wants to know whether or not trade talks will be resumed. I think they will, and there are a number of reasons for China to want to sit down and resume talks. In recent months, the state-run media in China has portrayed the U.S. as being the bully in terms of the trade negotiations. The U.S. enacted tariffs, and China has been on the receiving end. So by agreeing to sit down, despite the fact that the U.S. has been bullied, back home it's going to make the China leadership look very reasonable. Last week, a number of election polls showed that President Trump was behind the top 5 Democratic candidates. So from Chinese perspective, the longer they can postpone and drag this process out, it allows the anti-trade tariff sentiment to build in the U.S., and it draws us closer, obviously, to the election in November 2020, and thereby more pressure on President Trump to maybe agree to a less strong deal than he would have a number of months ago. Time is basically on China's side, at least from their perspective. And finally, by agreeing to additional talks, it'll delay the imposition of additional tariffs. The question is, how patient will President Trump be if talks are in fact resumed? Supposedly, according to the U.S., talks were 90% finished. So that would imply that really there isn't much left to be done. I think what that implies is that President Trump will allow a window of time for quick progress to be achieved. My guess is maybe 30 days. And if progress isn't achieved after 30 days, my guess is that President Trump will threaten to levy a 10% tariff on the additional $300 billion that currently isn't subject to tariffs as a lever to try to negotiate the settlement of the trade talks. China wants the suspension of all tariffs once a trade deal is struck. So the U.S. is going to have to agree to that in order for China to move forward. The U.S., for its part, wants China to codify legal protections for intellectual property in China. That has been one of the main sticking points and goals of the trade negotiations. The U.S. also wants China to curtail cyber activity. So these are the tough sticking points, that 10% that caused talks to break down a couple months ago, and this is going to be the nexus of the discussions in the next handful of days and coming weeks. The chart pattern in the Dow Jones Industrial Average suggests a rally to a new all-time high could develop soon. As I've discussed previously, there's a broadening top formation called a megaphone that has been building since January of 2018. So as you can see in this chart, the Dow dropped to February, March of 2018, rallied to a new high in September, October of 2018, dropped to a lower low in December of 2018, and has yet to make a new high above 28,953 that it made back in October. I think the Dow is likely to achieve a new high before the market runs into more trouble. At a minimum, I think once a deal is struck, the market gets a rebound lift from it. The market will be vulnerable to a decline, for the Dow at least, under 25,000. And there are a number of reasons for it. So ultimately, if this broadening top formation is correct, the Dow will drop ultimately to below the lows of last December. So I think we're at the point in time that investors would be wise to sell into strength or become far more defensive, because I think the market is vulnerable to a meaningful decline in coming months. Thanks, and may good things happen for you today.